Hey, what is up, traders? Welcome back to Forex Gym for another weekly Forex analysis. In this video, I'm going to be analyzing New Zealand dollar against US dollar, followed by Euro against Australian dollar. This is for the following week from 4th of May to 8th of May. So let's jump into the trading view and start analyzing charts. We're going to start with the New Zealand dollar against US dollar. So we're starting with the monthly time frame on NZD USD. So as we can see, we have this nice trend line going on in here. Let's bring up a pen. So we got this nice trend line on the monthly time frame that's been going on for already quite a long time, a good couple of years now. And let's see what happens for the last few months. So we can see that I messed up the trend line. Okay, so we can see that on the 2 months ago the price made this spike low, but it regained, or most of it was lost, and closed this like sort of an inverted hammer spinning top candle. And for the last month we pushed a little bit higher, and but we have not made much of a progress as of the monthly time frame, because we can see that this monthly bullish candle, it doesn't look particularly strong. And for this this month, only beginning of the month, we are pushing a bit down. So let's drill down to the shorter time frame and analyze what is going on in here. So on the weekly time frame, we don't really see much, because the candles are all over the place. It's just a nice bullish candle for all down bar, then up bar, and we have these indecision candles up here for the last 2 weeks. And also for this week we have closed as a sort of an inverted hammer. And last week was the spinning top, followed by the hammer, sort of a hammer candle. So nothing much going on as of the weekly time frame, other than it tells us that the price is trying to push higher, but so far it doesn't look that strong. Let's roll down to the daily time frame and see what we have. So on the daily time frames, the price is certainly pushing higher, but the problem with this one, so we also have this daily trend line up here. We've broken this the daily top one, but don't worry about this this trend line in here. So we have this trend line down here, which price been so far fairly nice. But what we have in here, so we have this high up here, and then we have the retracement, and the price came back up and took out this high. Then it had the immediate retracement downside, so it created this trend line, and we had this another high, so the price took out then this high. So what we can see is price is making marginal and new highs. We can see that this high is marginally just about marginally higher than this high, and this high is just a bit higher than this high. When normally price does that, what it tells us that the price might want to have continue to fall. In this case, fall, because when the price is making marginal new highs and is having these good pullbacks each time it takes out the high, in this case the first one here, and the second one was in here, because price came up and took out this high, and it immediately has the reaction towards opposite direction. When the price does that, it normally tells that the price is starting to weaken. In this case, we of course not sure the price can shoot up, but that's why we need to probably wait a bit more and see the what the price wants to do. As of this one, the price does, as of the big time frames are concerned, the price is looking down then up. So what I want to see, if the price continues towards downside, then I'm looking for the short one in here. I want to see the price coming down, probably down around this zone, which is roughly at 59.80, maybe down to these lows at 59.70 zone, and also a nice close. I don't want to see a nice close bearish candle and after the price returning to, in this particular case, if the price comes down to one of these lows, which is at 59.70, onto the price returning up to these highs here, which is at 60, 25 or 30 zone, where this high is at the moment. So we're gonna wait for the price to come down at 59.70 zone, around this area, and then retracement up to 60, 30 zone, 60, 30 or 25 zone. That's when we're gonna be taking our entry, and as of the stop loss is gonna go, we would be looking for, so if we enter at 60.30, let's call it 60.30, then our stop loss gonna be at, you can give it a 60.100 or 59.90 as well. So we're gonna position our stop losses somewhere around here, so above this this spike, just above this spike high here as well. So we're looking about 70 pip stop loss on this one. Let me get rid of that. 70 pip stop loss. So as of the targets, now let's gonna discuss the targets. So the entry is gonna be at 60.30, and with a 70 pip stop loss, we're gonna hold it down to 56.70. So that gives us about 1 to 3, just about the 1 to 3 risk reward requirement, if my math is not failing me, so about that level. Then we continue with the euro against Australian dollar from the monthly time frame. We've been seeing a nice moves for the last couple of weeks on this particular pair, and when the price was actually up here, the way I was looking at this, there was a chance that the price is going to continue upside and potentially get to this high, and maybe even taking out this spike high. But we can see that the price it has not really done that, and we came all the way down, closed this and left this wick up here with this long wick. It's bigger than the body, and followed by this bearish candle down here. So the price came down and it's sitting on, tested this support level. This is a fairly good, strong support level on the higher time frame, and it tested. Now we've seen the prices pushing up as of the beginning of the month by this small candle here, but obviously it's only a start of the month. So let's go to the weekly time frame, see what we have it in there. So as I said before, that the price came down and tested this support level up down here, and then this is just that retracement. This weekly candle left this it's like an invert, the hammer candle sort of, and even though this one looking weak as of the monthly time frame goes, because we have this weak on the monthly time frame followed by the bearish candle, the big trend is still looking up, though we need to have a precaution because it does looking weak, but it's still not confirmed that the price is completely turned. So that's why we need to be cautious. Let's go to the daily time frame, see what we can what we have is in here. And when the price came down and tested this support level, we can see this aggressive reaction towards upside. So for the Thursday and Friday candle, we've seen these nice bullish candles towards upside. The question is where these candles are going. I think the price has enough strength to push towards to these highs in here. It is the next resistance zone. The level is at, this zone is at 172.70 zone, so I do think the price has enough strength to push it towards these highs in here. So that will be the next resistance zone. However, for this currency, this pair to get me interested, I want to see a break of this spike high in here and a nice close, as well as after that, then when price does that, if the price breaks it, this spike high, which is at roughly at 173.50 zone, it needs to go a bit above this 173.50 zone, and then also the nice close. I want to say bullish close candle, and then after that I will be waiting for the retracement towards a downside. Ideally will be around down to this level of 172.70 zone, which are these highs, which we also mentioned that it's a resistance. Once the price has broken the resistance zone and close above it, then the resistance zone becomes support. So we will be looking for the retracement towards this zone in here. As I mentioned, entry is at 172.70, so the potential, and as of the stop losses go, we're gonna position ourselves so 70 to 70, so we're gonna be looking about 130 pips stop loss on this one. So we're gonna leave our stop loss at 171.50 zone. We're gonna position the stop loss below this zone, so roughly about down to this level. We're looking for the 130 pip stop loss, and as of the targets goes, we would be looking for the targets at 180, roughly about 180.50 zone. So 180.50 zone, 130 pip stop loss. So the entry is at 170, so we will be looking good, roughly about just under 800 pips, which gives us a very good risk reward. I know some traders might say that this is way too far, but this is euro against Australian dollar, and this currency has a very big moves. Even in normal market conditions, this currency can move up to good 300 pips a day. So 800 pips might seem a lot, but for this currency, this pair, it's not as much. Okay guys, this was a weekly forex analysis from 4th to 8th of May, and we analyzed New Zealand dollar against US dollar and euro against Australian dollar. Thank you guys for watching, and if you're new to this channel, make sure to hit the subscribe. I'm making videos about trading every single day. I'm making live daily forex analysis Monday to Friday at 8 a.m. UK time, where you can interact with me, ask the questions, as well as if you want me to analyze any other currencies, you can do that at 8 a.m. UK time, Monday to Friday, as well as I'm uploading a weekly forex analysis such as this one and other bunch of other videos about trading psychology and anything that will help you to improve your trading success. Also, if you like this video, make sure to hit that like. It really helps me and support my channel greatly, so make sure to hit that like, and I will see you guys in my next video. Have a great weekend.